Welcome to this RegTech Rising webinar. I'm Ghela Boskovich, and I have the fortune of hosting today. We'll also be live tweeting this webinar, so as a reminder, you can join in the conversation on Twitter using the hashtag RegTechWebinar. Well, the financial crisis of 2008 resulted in a tranche of new regulations for financial services covering markets, infrastructure, companies, prudential and conduct supervision, micro and systemic risk, among other things. And these reforms have dramatically increased costs and complexity for the sector relating to compliance, supervisory, and reporting requirements. Traditional compliance solutions for financial institutions are struggling to keep up with the fast-changing environment, and there are real challenges around legacy IT infrastructures meeting the new demands of this regulatory regime. Well, technology that helps institutions be compliant is not new, but the financial industry has seen a real growth in the application of new technologies. So we're joining on this RegTech webinar to hear experts discuss the fast-evolving ecosystem. RegTech providers need to really understand the pain points for financial services providers and then face the problem of bringing new technology into the institution. And financial services providers need to rethink how they approach regulation internally to bring together strategy, technology, and compliance teams to look at the big picture together. And even then, nothing will stay the same. Regulation is a moving target as the regulators try to get grips with where this risk is now and where it's heading. So I'm pleased today to be joined on the line with Jane Walshe, who is the co-founder and CEO of Enforced, Ruth Wandhöfer, who is the Global Head of Regulatory and Market Strategy for Citi, and Joanne Barefoot, CEO of Barefoot Innovation Groups, to discuss where RegTech is going. So welcome, everyone. And before I hand off to our guests to discuss this, I'd like to remind you again to check out Twitter. We are hosting an interactive Q&A during this conversation. So if you have any questions during the presentation, you can send them directly to us using the Ask a Question button at the bottom of the screen if you're logged on to the webinar, or via Twitter with the hashtag RegTechWebinar. So thank you, Jane, Ruth, and Joanne for being here today. And let's kick it off with this particular question. I'd like to discuss where banking is really headed and what the bulk of banking actually constitutes these days, which happens to be compliance. So what is the advantage of putting regulation and strategy first? Ruth, can you give us a perspective from Citi as regulation is strategy?
Yes, indeed. Thanks a lot, Ghela, and hello everyone online and on the phones. I mean, you explained it very clearly. The regulations have become a plethora and also very, very complex. And I think the real issue is if you don't see regulation in a more strategic lens over the long term to anticipate how that may change the industry and therefore how you as an organization in the financial industry will have to think about changing your business models, you're really missing the point. This is so much more than just about being compliant. And of course, that means that somehow we need to find the right tools to remove that compliance headache which is growing on us and which really is insurmountable unless you're starting to use efficient technologies to help you here. So it's almost the implicit business case of really thinking about automation, machine learning, and all sorts of solutions that can help answer problems on the regulatory front that frees up your time and your focus to think about how the future of the bank and your particular business model will look like and how you can actually go on to shape it.
So if you're looking at strategy, regulation of strategy, and at the bank perspective, you've got one inside view, Ruth, but Joanne, as you're working with big financial institutions, what are you telling them about regulation and compliance as a brand new business model?
Yeah, it's a great question. I think the first thing to say is that everyone on the program today has spent a lot of time deeply in this space, and you can get down in the weeds with it, as we all know, with compliance. But if we widen the lens and look at what's going on here, there's really a historic shift underway to potentially move the whole regulatory ecosystem, both bank compliance and the regulatory processes themselves, from an analog to a digital and computational era and model. All our regulatory systems were built in the analog age when data was scarce, computing power was scarce and expensive. Now they're both abundant And we're trying to move toward how to use data differently, AI and machine learning, and think about really unlocking the potential of better technology. And I think it's worth saying that there's sort of a historic moment potentially within our grasp, where we could actually improve public policy outcomes and reduce regulatory costs at the same time, which seems impossible. You know, we always think those two things trade off against each other. So what I am telling my clients is be bold, lean to the newer technologies, not just the thing that's going to add some automation and speed up an old process that has been there for 10 or 20 or 30 years, but rather the efforts to start with a data-first, technology-first approach and really deeply redesign compliance systems as opposed to just trying to build an evolutionary improvement on top of them. And innovators are coming up with amazing new solutions every day.
Well, that begs the question. When I think about regulation, I think about audit and reporting primarily, right? That if I'm having regulatory oversight, what I need to do is prove that I'm compliant. And if we're talking about a data-driven world and we're talking about ease of accessing that data and then reporting on it, then shouldn't that automatically, if we digitize that entire process, reduce operational burdens already? But that seems rational to me, but that doesn't necessarily say new business model. And I think there's a whole lot more power in proposing a compliant / regulatory business model instead of just overseeing transactional services. Jane, you're building a solution for regulation and compliance. You've taken a different look at the business model, but you've come from a regulatory background. Tell me what you're doing at Enforced and how you're seeing business model change with regulation.
Yeah, I think there's so many points to make, Ghela, and I agree with what my two peers have said so far on the WebEx. I mean, clearly there's a significant opportunity here to embed regulation at the code level. That's something I'm very excited about. I mean, we're not doing that yet in Enforced. Hopefully when we've had a very successful seed round, which we're in the middle of at the moment, and we've got some resource, we'll be able to do a lot more innovating. We're doing a variety of things around gathering together, public unstructured data, structuring it, enabling firms to make better decisions using it. But absolutely, the sort of thing you're describing, whereby we have the regulation and the compliance at the code level with automatic reporting, or almost a situation, Ghela, where you don't need reporting because the regulator can dive into the data itself and get what it needs from the firm, and it's all very seamless and frictionless. I absolutely think that's the art of the possible, and I think it's on the horizon. But I think, as Joanne said, what she's advising her clients to do is be bold, because these seismic structural changes that are required in terms of the approach of large organizations, and again, Ruth will be able to comment on this, they do require a lot of guts, and they do require resource, because of course one of the biggest barriers to RegTech innovation is legacy systems. Large, very complex organizations have, really innovative, imaginative professionals working in them. People like Ruth, who's on the call, and her colleagues at Citi. They're doing great things, and Citi were great with Enforced. When we were on the lab, Ghela, where we met the Accenture thing, really supportive and really enthusiastic about the tech. But then you go back to the ranch, as it were, and your own internal technologists say, well, we've got these 25 legacy systems, and to change them and get us all onto a new platform is going to cost billions of dollars, and how do we keep the show on the road? So, none of this is easy, but I absolutely think it's possible, and I think what we'll see is the snowball effect. So there are fabulous new technologies being created. There are some amazing ideas around what people are going to do with the blockchain, like putting regulation on blockchain and making everything very frictionless. And we will get there, but I don't think it's going to be easy necessarily, and it does require a bold approach from the industry. And then also by comparison, me as a former regulator, the regulators have to be bold as well, and they have to enable the industry to operate in an environment where they're able to do sandboxes, try things out, and not get hammered to death if something goes wrong, because things will go wrong, they always do.
Well, isn't that the point of a sandbox to test it? But Ruth, piggyback on that for me.
Yeah, to extend that argument, I think what needs to be really understood very clearly is that regulation itself is the biggest barrier to entry, and it's the biggest protection for incumbents not to change too much. But at the same time, we do see that technology, particularly when we look at that revolutionary element of distributed business models finding their way into the market across distributed ledgers, blockchains, etc., we actually are starting to see a reality emerging in parallel to the existing one that is going to start to threaten how things work today. And whilst regulation protects how things work today, I think there is a real question as to which regulators will actually start to say we're going to embrace this new world and therefore reduce certain barriers and allow things to happen differently and therefore to create real competition, which of course will then create real realities for people that maybe today are slow to move. And I think that comes back then to that question of legacy IT, all the hamstrings we have today, which really are never going to be worked out unless there is enough of a threat that something else is happening to take over facts. And I think a number of people are starting to realize it. It takes time to trickle down, but effectively, given that most organizations in the financial industry are built on legacy systems to start off with, I mean, never mind regulatory compliance automation, there is a real issue at infrastructure level that the existing automation is vulnerable to, faults and is vulnerable to hacking and all sorts of things. And that same thing goes also for payment systems, central banks, infrastructures in the market. So I think there are a number of things at play which all come down to the fact that we now see technology taking off in a very different way, in a slightly less controllable way, and therefore there is a risk that parallel realities will just be created with a very different mindset that may not look at shareholder returns, but much more about returning to the people that use it, which is a very different logic, and that's also how the new generation operates more than the past. And I think that should be definitely the trigger for people to start really rethinking their approach to business.
Well, you mentioned obligation to shareholder. Yeah, but Joanne, go ahead. You had something else to add.
Yeah, I just wanted to join in on the point that regulators themselves must and are beginning to change. And there was a report that came out just yesterday from the Aspen Institute in the United States doing a global survey and finding 37 countries have either launched or are I'm sorry, 27 countries have either launched or are have on the drawing board a regulatory sandbox type of approach, and a larger group have some sort of innovation lab. And this is the heart of the challenge because the technology already exists for the most part to do things vastly better. And the difficulty is getting from here to there and changing this incredibly complex, enormous ecosystem that has so much at stake in the financial system and the regulation around it. And one idea I'd like to put on the table is that I'm urging through the work I've been doing at Harvard and in my RegTech firm, the development of an alternative regulatory channel in which the regulators could begin to provide the industry with an option to take certain products or areas of activity and say we are prepared to prove through data that we are getting the desired regulatory outcomes, and therefore we don't need to be examined so closely in terms of our regulatory processes, our compliance processes and infrastructure and all of that, and then lower the cost of that compliance burden for companies that can prove through data that they're doing what's desired. I hope you can't hear these sirens in the background. I'm in Washington, D.C. There's some dignitary going by.
But here's the question, then, Joanne. Out of that, sure.
And then make it optional. So let the industry choose. Do you want to be regulated under the old model or the new one? And by doing that, we would not have to force change on the whole system at one time. We could start small and let a new channel grow up organically next to the old one. And I think it's way more practical than trying to have a big omnibus regulatory reform.
Well, I can see two parallel tracks in terms of shifting regulatory model, but the question comes down to the data. And if the data is still trapped in legacy IT systems, that renders it almost a moot point. So if we're still stuck in a legacy architecture and we have siloed data and we can't actually identify exactly which systems hold those particular data points that would prove compliance, we're back to square one in terms of the model, the new model becoming moot because we still can't prove compliance to the old model. So is there an opportunity for RegTech, as it were, to become the driving IT strategy in terms of architecture, organization, and data structure? And is it possible that we have to really look at the back end first before we think of any sort of improvement on the client end or on the services end, but we have to actually look in the back office systems first to make any sort of fundamental transformation?
Yeah,
I think absolutely. I mean, the point is that there are actually firms out there that have very, very good data analytics and as well as self-learning algorithm solutions to look at the existing data across all these lenses. So to look at specifically also unstructured data, which is much harder for banks to get their hands around, voice records, PDF files, paper, etc., and to take all of that data and identify where it sits today, what it's about, and to create a sort of whole logic around that, which unfortunately, because of sort of bad data processing in the past, hasn't really been there. And that is the first step that banks need to undertake in terms of data cleansing to understand what's actually going on underneath the lid. And there you will already see massive elements of risk management and regulatory risk management that come out of that, because you actually are able to see, oh, I have much more credit risk across different books of clients because it turns out that some of them are the same and they've taken different loans under different aliases, for example. And you can apply that to different types of products and sets of solutions to actually find what you have today. And once you've gone through that, in parallel, you start thinking about how can I organize a better data architecture, because that's also one of the big steps banks are taking to actually streamline data into certain nomenclature. And then you get to that next digitization level. And of course, ultimately, which are also companies out there that are doing that, the future really is starting off in terms of data generation with digital documents themselves. So not having any more paper, not having any more PDFs and things like that, but actually intrinsically digital documents which have an embedded audit trail repository, etc. And I think that's where the future is going, but you need a very focused approach on getting there, because you have to work with your legacy data as much as with the new data that's generated at much higher speeds and volumes.
So would the logical starting point then, when we talk about RegTech, not necessarily be automating some of those manual processes we have around reporting, but actually start with a data strategy that RegTech is then able to amplify? Because it almost sounds like, if we're talking about RegTech as a hashtag, it sounds like a Band-Aid for certain things, and you can't extract the full value of those new solutions and those potential new business model creating solutions if you don't have a grasp around the proof points and the data. And it would also allow, if we had a master data strategy, us to do that regulatory paradigm shift in parallel and allow for Joanne's model of self-compliance or self-auditing through data proof to emerge as a new model alongside the traditional one. I mean, is that the root cause of some of the challenges around RegTech, is that we don't have proper data strategy?
Yes, and we don't have proper data management in the first place. I mean, just to take one more little point, if you look at the generation of regulatory report in some of the institutions and you want to establish a data lineage of where the data comes from, you often end up in larger organizations with maybe lucky 60+% of automated feeds from systems where you can have sort of an automated view of where the data comes from, and all the rest in most of the cases is manual adjustments done by various individuals, which is not audited and not tracked. So the ultimate outcome of that regulatory report may be half of it dreamt up, if you see what I mean, right? So in that sense, it's not enough just to think about automating reports. You need to enable yourself to automate reports at the core.
So we have a question that comes from Randall Haupt. He asked if you could actually, Ruth, elaborate on the dynamics and characteristics of the distributed business model you referred to and that you're talking to about now in terms of being able to check portfolio and conduct risk and reshift the model when you understand your internal data. Do you have any examples or theoretical examples of that?
Yeah, what I referred to earlier in terms of this distributed model was largely around the power of distributed ledger now and in the future. And what we do see in the market is that there are ideas out there that aim to leverage a distributed network approach plus artificial intelligence plus voice recognition, all sorts of elements in analytics that you can altogether use in order to assess, for example, in an automated way, whether a person should get a mortgage or not. And then providing that mortgage could be either linked back to the traditional banking system, or it could be linked back to, digital currency platforms that today, in parts also do crazy things with ICOs. But there is an element where you can see a digital money system governed outside the laws of governments today continue to emerge that would basically say we offer alternatives for that person to get a mortgage at a fraction of a cost to what traditional providers do. And I think the fact is that this vision is out there and the technological tools are out there and are being refined. And it only needs a few very bright brains to just put this into action. And I think that has a real dynamic of potential of changing the way the existing economics of many, many businesses work today, which are all built on information asymmetries to a certain extent.
Well, so if we take that just one step further, what you're talking about is having an essentially trustless exchange place that, because of data and data proof and ability to prove or simulate a proposition, they're able to do that without regulatory oversight. Is that kind of what you're hinting at?
Well, I think the regulatory oversight is exactly the question, because I think regulators will need to think about embracing new ways of doing things and also embracing the fact that data is the new identifier, the new currency, the new tool to enable a lot of the services that today are not enabled. And so in a factual way, you could really assess a person up, down to bottom through all their emails, all their feeds, everything they've ever done as a data footprint to find out whether that person, for example, is creditworthy, which is quite different to how credit rating happens today, which uses very few points and actually induces people to borrow money to have actually bad credit in the end. So I think it's about understanding those dynamics, and therefore the role of the regulator is so important to really immerse themselves in learning, which is what Anne also referred to in terms of all these sandboxes, all the activities that are ongoing around the world, but also think about how then that next step in terms of their regulatory approach can look like, because there's clearly different industries being built up in very different ways with their very different norms and objectives. And clearly you don't want to leave them in an unregulated way. You want to include them into the economy in a formal way. And I think that's where it's quite interesting to also look at what the European Parliament is looking at. There are some very active MEPs that are going to provide some approaches and resolutions to Bitcoin and blockchain in the coming months. And I think people are coming around to the fact that you can't ignore it, and it's not all illegal, but you have to find a way of making certain things legal or embed your principles into them.
Well, so coming from a regulatory background and actually serving as regulator, Joanne, how do you then tackle these emerging potential distribution models or these new markets that are being created because data and tech can now enable us to do this? What mindset does the regulator need to have in order to really code policy for future, understanding the implications of technology? What would be some advice you would give to the regulators? Having seen both sides of this.
Just answer that. Yeah, I mean, I think that's a really, really important question, because of course what the regulator struggles with is resource, and with the best will in the world, the regulator is not going to have the most experienced and innovative technologists actually working for it. Might have one or two people. There's some very good people at the FCA who are very imaginative and open and communicative, absolutely. But in terms of a regulator being able to keep up with some really cutting edge, innovative stuff, that's hard. And I think the regulator needs to keep very, very close to the industry. And I think because we've seen so many sandboxes springing up, that's exactly what regulators are trying to do. But we do see, consistently, we see a huge lag between what the regulators regulate and what's actually happening in the industry. So we saw it, with the global financial crisis. I don't want to go into that, but these synthetic products that the regulators just didn't have their head around at all for a long time before they, then they screwed up the system. The regulators went, oh, what happened there? And, we don't want the same thing happening with technology, where technology accelerates so quickly. There's so much innovative stuff happening, and the regulator is still regulating in a very analog, quite a slow, inefficient way. But I do think regulators are alive to this, but I think for them the resource is the biggest problem, because, the FCA have got, I think they've got about 3,000 or 4,000 staff, and they regulate 56,000 firms. There's only so much that they can do, but that's not an excuse for not trying. And actually, on the other hand, and more positive note, the technology itself should enable the regulator to regulate more effectively. So, they shouldn't just be responding to what the industry is doing, but looking to innovate themselves. And I'll give you a very basic idea of I think the regulator's got quite a long way to travel, and it's one thing to talk about all these great things we can do, but then if you look at where we are, we're nowhere near as far along the road as we will be, or as we should be. So one example is, Gabriel reporting, or even the reporting that we have under the senior managers regime, for example, in the UK. It's all done by PDF document that you fill in and you email, or you submit it onto the FCA website. It's very, very clunky, very old-fashioned. It hasn't changed for years. And they need to resource up and connect with the industry and with the tech firms to really innovate themselves. But again, like everything in financial services regulation, it's not cheap and it's not really quick. But if they get it right, then hopefully for everybody we'll have better regulation, less friction, cheaper regulation, and firms won't have to have hundreds and hundreds and hundreds and hundreds of people working in compliance, because the tech can do it much smarter. And then you have the rules deployed via the technology, via the code, and people are advised, however they're advised, say with the robo-advice, just following the thought through to its logical conclusion, and the compliance is built into the robo tool, which I kind of think is what you were hinting at, Ghela, actually, in terms of how do we have to look now at the tech before we look at the ultimate delivery of the service. I think we probably do, because you can tie everything in together, and then you need the regulator to be plugged into that as well. It's all very interesting, I think, very exciting.
Yeah, Joanne.
My advice to regulators, and I am working with regulators all over the world, is number one, these sandboxes are not just a nice to have, interesting thing. I think regulators have to have sandboxes. There is no other way for them to get enough depth of knowledge and rapid enough learning by just talking with innovators and so on. And especially for bank regulators in the U.S., the innovation is happening outside the banking system for the most part, and our federal regulators don't see it because they only regulate banks. So I think sandboxes are essential, and I also think I know there are a lot of people in the audience from the United States. I think in the United States, with our uniquely complicated federal and state regulatory process, that we should be creating a joint sandbox or greenhouse or reg lab for our regulators to work together and get hands-on with the technology. The other thing I will say is, as a former regulator, I think the regulators have the hardest job in all this. They're supposed to get it all perfectly. They have to embrace the upside potential of innovation and not only see the risk, which is culturally hard for them, as they will admit. And then the rest of this, frankly, is regulatory courage. And people think regulators can't change, and I know that that's wrong. There are regulators all over the world who are bringing boldness and vision to this challenge. They're doing it with guts, and they're learning by doing. And we need to encourage them. We need to not punish them if they make a mistake here and there on a small scale, because they have to learn by doing. They have to get enough loosened environment that they can use trial and error, experiment on a small scale, collaborate with the industry and the other interest groups and advocacy groups, and create a really robust dialogue. And I think that's starting to happen. It's a fallacy to think that the safest thing in this situation is to hold still and not do anything because it's not clear what to do, when in reality, that's the riskiest thing, because the world around us is changing, and this regulatory model we have is going to be broken apart by the technology change that's coming at it, and we have to enable it to adapt.
Well, I think that sums it up really beautifully, Joanne. Thank you. The fact is, we've got changing business models. We have changing business models because we have different access to data and architecture structures. We can ask different questions, and we can prove different answers. And the fact of the matter is, it's moving at the speed of light. Regulation has always been reactive, and it takes some boldness to shift into a very proactive understanding of what policy can do for the industry. And there's the gauntlet being thrown. Be bold, be proactive rather than reactive, and actually embrace technological change. Unfortunately, that's all we have time for. I thank you all, Jane, Ruth, Joanne. It's been an absolute pleasure. And thank you to the audience for joining us today. We are really excited to be discussing this in a few more months in depth at RegTech Rising, a conference that's being held on the 31st of October through the 2nd of November in London. At this conference, we're going to be getting best practice advice from those leading the way in RegTech innovation and adoption, including our guests. So find more about this particular conference at finance.connect, that's KNECT, 365.com/RegTech-Rising, or just Google RegTech Rising Conference. But if you have any feedback on today's webinar or any recommendations for future webinars, please do complete the short survey at the end of this. We'll flash that particular survey up on your screen shortly. But my many thanks to our guests and to our audience for participating in today's discussion. We are looking forward to talking about RegTech and the implications for the industry, leading all the way up until the conference. And until then, I wish you goodbye. Thank you.